Okay, welcome everyone to another weekly recap with the Defiant. Thank you everyone for joining us. We're here with YYC Trader, our head of news, Jeremy Nation, and Owen for now, our staff reporters, and myself, Cami Russo, the founder of the Defiant. And we'll be going over all of the biggest headlines and news of DeFi and crypto this week. So some of the biggest topics we'll cover. The SEC delayed the decision on the Bitcoin ETF, which made markets erase all of the gains we saw this week. And Grayscale had won a legal challenge against the SEC, which had spurred those gains, but again, which were just erased. Uniswap class action lawsuit was dismissed, and Twitter gets money transmitter license, hinting at a potential payment app built on top of the social media network. Crypto payments incoming, maybe. So those are some of the biggest headlines we'll be covering. YYC, why don't you start us off with the market action?
Sure. So, after a summer of very low volatility, we've seen quite the roller coaster over the last 10 days or so. Um, so, early on in the week, we got some great news in the form of Grayscale winning a legal challenge against the SEC. Uh, Basically, what the case was all about was that the SEC denied Grayscale's application to turn GBTC from a closed-ended exchange-traded product of some sort into an ETF, which would be able to be more freely traded with daily rebalancing and essentially trade closer to its net asset value. Right, that's one of the biggest problems with GBTC is that it's been trading at a discount to its NAV simply because there's no way to redeem the shares for the underlying Bitcoin. Anyway, so the SEC denied that, and so so Grayscale sued them, and the judge came out and said yes, the SEC acted capriciously, and especially given the fact that they did approve two Bitcoin futures-based ETFs last year, or was it this year?
It was last year.
It was last year, right?
Yeah.
Yeah. So based on that, I believe um, the judge said that the SEC should review its decision, and that's basically it. It didn't say that the SEC needs to approve it or anything beyond saying that it should be reviewed, and that the SEC just denied it um, in contravention of whatever regulations. So markets cheered that. We rallied. Bitcoin was up 7% in a matter of minutes, I'd say. That's one of the biggest green candles we've seen in a long, long time. And so sentiment was all bullish. It's like, oh yeah, ETFs are coming. I believe there were some analysts who put the odds of approval in 2023 at 75% or something, right?
Yeah.
And which might still happen. I mean, the year is far from over, right? And yesterday, the SEC basically came out and said we need more time, and the decisions on the ETF applications from BlackRock, WisdomTree, Invesco, like a bunch of big investment management firms, which was supposed to be decided on, I believe it was on the 3rd or 4th of September was the deadline. They've now pushed that by another 45 days to mid-October at the earliest. I mean, this is the SEC. They can delay and uh, you know do it again if they want to. I mean, the law's on their side, right? There's no compulsion for them to act within a specific period of time. And yep, so all the gains that we saw on Tuesday and kind of into Wednesday were all wiped out yesterday afternoon. And in terms of the weekly candle, it's pretty much flat, and the monthly doesn't look too great. So traditionally or historically, August and September are the weakest months for all markets. So, uh, and of course, with everyone getting back from summer holidays and getting back to their trading desks, I'm sure we'll see more volatility in the days and weeks to come.
But I think, it was Jake Chervinsky, who's been on the podcast, did note that that the SEC was arguing that Grayscale's proposed ETF was didn't adequately protect against fraud and manipulation, and having that struck down would end a reasoning of the SEC, which had been going on for he said a full decade. That's been their reason for denying an ETF. So interesting. It'll be interesting to see what the SEC comes back with for these future rulings.
Absolutely. And why are ETFs? I mean, why is the crypto community so crazy about a spot ETF? Just go and look at the price of gold after the first ETF was approved back in, I believe, 2003, 2004, maybe.
Oh, really?
Yeah, because this basically means that a whole bunch of funds around the world are forced to own this asset because it exists as an ETF and it's supposed to be like part of an ideal asset allocation. So you have like these flows of basically passive capital, right? Which just keep flowing into these ETFs month over month as people's 401ks get funded, et cetera, et cetera.
Mm-hmm.
So it's a massive kind of floor under any asset.
Indeed.
Yeah.
And
Go ahead.
Wouldn't Bitcoin and crypto have to be a part of a portfolio composition in the first place for that to happen? I mean, I'm not arguing against the fact that like having an ETF approval would be huge, but I think for gold maybe it was a bit different because like precious metals were already accepted as part of sound portfolio composition. I don't know if crypto is there yet. Like I think like first traditional asset managers have to accept that like a portfolio should have 10% of crypto or 5% or whatever it is they want to allocate, and then from there you can expect this kind of floor for just like passive flows into this ETF.
So that's happening already. There were a bunch
Yeah.
of investment banks. We did a story on it I think a couple of months ago, where a big asset manager came out and said, crypto or Bitcoin should be a part of, I think it was 5% of an ideal high net worth.
Right. Yeah, it's like
portfolio.
that discussion. Yeah, like people are slowly coming around to that idea. So yeah, I'm not sure we're there yet. We're like most like the biggest asset managers just like accept that crypto should be a part of a portfolio. I think there's a lot of resistance against that, but I agree. Like they are coming around to that.
And once an ETF
fees
product,
on it, if they can earn fees from it, and if they have demand for it from like people who are actually holding money from it, they'll do it.
Yeah.
They'll trade like toxic waste if there's demand for it. So
And
no.
Well, literally, they
yeah.
are.
Yeah. So
yeah,
it's. I mean, they just go where the incentives are, right?
of course.
and once one exists, there will be an incentive. And
Absolutely. I think Fidelity just put out a report yesterday or 2 days ago about the case for ETH as what was it? Emerging money or something.
Yeah.
So, I mean, there's
a new meme. Not sound money anymore. Emerging money.
I think they refer to ultrasound money as well in the report.
Ultrasound money. Interesting. What's the argument for emerging money?
That basically the arguments that we see on CT all the time, deflationary asset, yield bearing, et cetera, used as unit of account in the ecosystem. Yeah.
Interesting. I mean, I'm sure like after we have a Bitcoin ETF, then the whole like crypto Twitter and like speculation is gonna move to now when ETH ETF. That's gonna be kind of the next
and the
step.
applications have already been filed, right? So I'm sure it'll be quite close to each other, like we saw with the futures as well, right?
Exactly.
Indeed.
You
But
mean
it
you?
sucks that there's like no timeline for the SEC to actually provide an answer. Like, who knows?
Yeah.
We'll see.
Why was he? Were
Protect
you
the
saying?
investors, right?
Yeah. Why was he? Were you saying that? Like, you think if a Bitcoin ETF gets approved, an ETH one will be soon on the heels? You think?
Absolutely.
Or you think? Really?
Yeah.
They're not like categorically separate or like moderately distinct from each other.
No,
Not
I don't think so.
particularly. I'd say like in terms of like trading volumes and stuff, like which is what the SEC is supposed to focus on, right? So there's no manipulation and stuff. So it's not illiquid.
Mhm.
I'd say like daily transaction volumes are probably comparable. So
all right.
So yeah, I don't see a reason why they would approve Bitcoin and not ETH, especially since we have running futures products for both.
Yeah.
Okay. Fair enough.
Sure. Okay, let's move on to the next headline. The Uniswap Labs class action lawsuit.
Okay, yeah, I can take this. God, it feels like that was 2 years ago. I guess that was maybe literally 2 days ago. But so on August 29th, we found out that Judge Catherine Bala, I'm not going to pronounce that right, of the Southern District of New York dismissed a class action lawsuit against Uniswap and a bunch of people who invested in them. And the big, I guess the big exciting thing was that so the plaintiffs were arguing that Uniswap had facilitated these scam tokens. And I don't know exactly the legal language they used, but basically that they got scammed and Uniswap facilitated that. And the judge threw it out on the basis of, look, they're just operating this decentralized software. They didn't endorse any of these products. So that was the big thing, that the judge seemed to exhibit a pretty high degree of understanding of decentralized finance, understood the difference between operating an interface and operating the software in and of itself, and also, took some shots at Congress and the lack of regulatory clarity that many people in crypto have criticized for seemingly years now. So that's the big deal. Whether that, and also just one other point to note is that this judge will be presiding over the SEC's case with Coinbase. So it's definitely, I think, encouraging to people in crypto that the judge at least has a moderately sophisticated understanding of what it means to what decentralization means. And Uniswap is maybe one of the best in terms of, like, I think it's like non-upgradable. So it's kind of a good bellwether for the rest of the industry. So that was that. I think definitely encouraging for crypto proponents. And yeah, I don't know what you guys took out of it, but that was the main high level take for me.
I mean, it's certainly a win to see a judge exhibiting knowledge of the crypto space and totally. Some of the dearth of regulatory clarity that we have, and the knowledge that this individual is going to be presiding over the Coinbase case suggests, to me at least, that we may see some justice from the Justice Department.
We'll see. But yeah, encouraging to see that happen, I think, for the DeFi proponents.
Yeah, because it does imply two things. Like, one, they see that Uniswap is actually decentralized and not controlled by a centralized entity. So that's like the first step that this is what they see, that they're arguing, okay, this is actually a DEX, because a lot of kind of the questioning around DeFi is that it's actually not decentralized. So in this case, they actually see that. And then the next positive step for DeFi is that, okay, not only do they recognize Uniswap as decentralized enough, or actually decentralized, they also are ruling that the activity that happens on a decentralized protocol isn't the responsibility of the developers of that protocol. So if there are scammers issuing rug pulls on Uniswap, that's not Uniswap developers' fault, or like the protocol developer shouldn't take any responsibility for that. And I don't think that's that argument, which is pretty consensus within crypto. I don't think it's consensus outside of it. Like I think there's a lot of debate over whether that's true, and I think the best example is Tornado Cash, which we've talked about here. It's like, okay, yeah, like Tornado developers did this, but they built this tool, but they don't have responsibility over how that's used. And in that case, that that didn't go in the developer's favor, but in this case it did. So I think there's not consensus outside of crypto that that's the case. So it's interesting that for Uniswap it went their way.
I think an important factor here is the fee switch. Uniswap did not profit from these scam coin transactions. If the fee switch was on and Uniswap Uni token holders got a cut of those trading fees, the decision might have been different. I think
that's interesting.
Yeah.
You said that about Tornado Cash last week. I think that was what I see, that you thought the Torn token had a lot to do with the Tornado Cash ruling.
Yeah, so
the charges.
I mean, just logically to me, like if you're seeking damages from someone, they should have profited from this said activity that you lost out from, right? Otherwise it doesn't make sense. I think that's one of the core kind of principles of like common law, right? Damages must be kind of proven. So the fact here that Uniswap, neither Uniswap Labs nor Uni token holders, no one except the LPs in those particular pools made money from those trades. Right. And I think that could have played, a factor. I'm not sure if it might be buried somewhere in the decision itself, but if it isn't,
no, that makes a lot of sense. I mean, intuitively to people coming in, it's like, if they're not incentivized for those trades to happen, I can see why Uniswap comes out looking much cleaner than if they're taking a fee on that.
I'm curious, this ruling, I wonder how it might bear in terms of the interpretation of the Treasury Department's most recent handed down prospective regulations that may affect, decentralized exchanges in terms of KYC. Here we have a judge saying that this decentralized exchange is not responsible for the things that people did on it. Here we have another entity saying that decentralized exchanges, may be seen as brokers in the crypto sense and thus be responsible for gathering information on people that transact on them for the purposes of reporting. If there's if there's a judicial ruling that says Uniswap's off the hook for that type of thing, will it run afoul of the IRS's attempt to gather that information or force Uniswap to gather that information? I'm really curious to see how that plays out. And if there are other judicial actions that perhaps reinforce or go against what has been handed down by the Treasury Department in the years coming before this enforcement.
Yeah, I think it'll be messy. I mean, I'm glad that Uniswap is one of the protocols kind of in the limelight, just because I think I was talking to a developer like years ago, but she was like, yes, the contracts aren't upgradable from my understanding. So it's also just very different in terms of, I don't know. I mean, I could see there being like sleazier exchanges where it's like, they are trying to pump volume or something. But Uniswap is big enough that they don't need any one scam token. So, and they're actually solidly decentralized, I think, in terms of, or their contracts are solidly autonomous. Plus, they're not making money on trades right now. So, encourage. Yeah, I'm glad Uniswap is our kind of not a bad flag bearer, I would say.
Yeah, I agree. So moving on to the next headline, but before we do, I just want to give a shout out to our sponsor, Arch Finance. Arch is a app that empowers you to invest in the best of crypto and Web3 with ease and confidence. You can invest in risk-based portfolios, earn yield, and diversify your holdings, all in a few minutes, going through their app. And it's non-custodial, so you retain full ownership over your assets. So speaking of ETFs, Arch builds tokenized sort of ETFs. Check them out at arch.finance, and just heads up that they're for non-US residents only. So watching out for regulations there. But yeah, arch.finance, check them out. Very cool tokenized funds. And yeah, speaking of interesting DeFi innovation, Link had really impressive growth with a new liquidity model. Owen, you did this, or you want to take it?
Yeah, I'll start. Although shout out to YYC, he was the one who surfaced this for us. So I definitely can't take credit for digging into the kind of lower cap tokens and finding this, but I can summarize. So yes, Link is a new protocol, new paradigm. They even say that in their, I looked at their code on Etherscan. They said they're a new paradigm. Whether or not they are remains to be seen. But fundamentally, the primary mechanism for the token is you trade between ETH and this token Link, or Link ETH. There's a 6% tax. 3% of the tax is converted into LP tokens, which the holders of Link can claim. So basically, there's like, as people trade into the asset or out of it, there's a stream of liquidity being purchased by the protocol, which then can be claimed by Link holders, with the end result being that not only are you buying Link when you buy the token, you are also buying a stream of LP tokens. So that's kind of, it's interesting. I won't claim to have thought through what that actually means, whether it's sustainable, but that is how it works. And it's kind of interesting because, liquidity providing is maybe a bit more sophisticated than, just like holding spot. So, you're giving people this kind of revenue generating asset as well as the spot asset. So that is, it'll be interesting to see where it goes. I don't know what your guys' thoughts are. I mean, there's kind of a lot to talk about in terms of, whether it's sustainable, whether it matters. People have messed around with liquidity in the past. But it's interesting kind of distributing it to the community instead of kind of trying to incentivize it through a pool or something like that. So.
Well, you run the risk of them selling. So
of the Link team,
it's completely opposite to
the community
protocol-owned liquidity, right? Where the protocol owns nothing, and you're handing it out to LPs. I think it's a cool experiment.
Yeah.
One thing that plays into it, especially on mainnet, is gas fees. So you do end up with a lot of sticky liquidity from small holders for whom, like, if you airdrop them $50 worth of LP, it's going to cost you
anywhere.
More than that to unwind it back into tokens and ETH, right?
Mm-hmm.
So it's just going to be sitting there. So does that mean it's a pool of dead capital, or is it, like you said, is it sustainable or not? We'll have to see. But it's just another experiment in the more degen corner of the market, right? So,
but if you have capital sitting like that and the price makes any sort of action upwards, it's going to trigger these sell-offs of people that were waiting in the wings to be able to make the gas worth their while to take the tokens. So there are going to be some predictable dips after any type of meaningful price action, in my opinion.
Dips in
the
price.
Yeah. Because as a result of the price going up, suddenly those tokens that have been sitting in the people, that dead liquidity, so to speak, people have just been like, I got $50. Suddenly I have 500. Well, I'm going to sell it. I'm going to sell some of it, right? Maybe I'll sell it.
I mean, that's the case with any token, I guess. Maybe the difference is that people are feel that they were trapped before reaching a certain level because they couldn't just sell because of gas fees. So that would be a difference. But you could also make the case that, people will with any token will wait until it reaches some certain threshold to cash out, you know?
Well, yes, but in this case, you've got like a pool of them, like literally fish in a barrel that you know are going to cash out. Now it's different from having like vested, like, you know, a company that sets up a, you know, token has like, you know, the team allocation that's vested. I like how they've taken that team allocation and like distribute it to the community. It's a very interesting model, right?
Yeah. I think it's interesting. You know, there's like because it's like it's self-sustaining. It's like transactions generate this tax that goes into the liquidity pool, and then that liquidity pool gets distributed further with holders.
So again, this all boils down to fresh capital keeps coming in.
Yeah,
right? It's very similar to previous DeFi tokenomic designs that we've seen. So you won't get taxes unless people trade into the pool, right? And why are they trading? Either they're getting in, which is good for the growth of the project, or they're getting out, which means it's like potential death spiral.
Yeah.
So still early days.
That's interesting.
I think one of the biggest things that they're looking to solve, or at least they claim to, is that, you know, one of the biggest ways you get scammed with coins is when the deployer, who generally owns most of the liquidity, pulls it and runs away, like the ball deployer did on Base Chain, right? So in this case, with the deployer owning barely anything and the LP kind of spread out across, 1,000 holders or so? It's a lot more predictable. It's harder for one big whale to just, you know, drain the pool and run.
Yeah, it might be an interesting mechanism that could be part of another token, right? Like, I don't know if, like, to your point, obviously, I don't know if it's just reliant on more capital to get those fees, but like, if this can be tacked on to a token which is used in different ways, I mean, maybe it's an interesting mechanism, but I'm not sure about it like being the end all be all for Link.
True.
Yeah.
So what is Link? So I saw I read your story, Owen, and like like it was interesting about the token design, but what actually does the project do?
I mean, it makes you money. What does any project in crypto do? You buy the thing and it makes you money, Cam. You don't have to.
Okay, so it's a project that's it has to do something other than
it's a liquidity protocol. See,
and you need liquidity for
tokens.
No, they have an ambitious roadmap. There's like a social there's a SocialFi app, and like there's a bunch of other stuff.
Oh,
a roadmap.
This is crazy. The roadmap. Okay.
Oh my God.
I'm sorry.
You guys are
fighting everyone's back
in the bear market, guys.
I know. No, it's true. I shouldn't laugh. They have it, and obviously remind me. There is a whole phase 2, which is kind of touching on, at least in the documentation, like kind of amalgamating a lot of different avenues, like Twitter, Etherscan, Uniswap, kind of talking about how it's pretty vague in my opinion, but kind of gathering that together in one app so people don't like bounce around. So.
And to be fair, a lot of these tokens launch and get runway from this type of thing, and then develop into meaningful apps with some vagueness and ambiguity. So it's not, that's how it is.
It's so I don't know, like to me, and if there's like any Link fans or team members, sorry for laughing. It's just, to me that it is kind of a red flag when the main thing about a project is their tokenomics. Like, my personal opinion is that a project should have some sort of value of, there should be something there, some use case, some utility that they're giving to users, and have that be proven out and have some product market fit, as VCs love to say. And then, you can experiment with token design and make it better and so on. But if you're not delivering any value, any utility at first, and you're trying to make the token design itself be the utility or give you enough runway, Yeah, I don't know. That doesn't sound very sustainable to me. Like, to me, just like the utility should come first, and then you can experiment with the token. Because like as you guys, what was saying, like, you need liquidity for this thing to work, and the reason why a token would get liquidity is because people are using it for something. But if there's nothing to use it for, why would people buy it other than to get whatever fees they can out of this? And again, it's like the same criticism I've been saying for a while. It's just like this casino, it turns into this just like speculative game, which I'm sick of. Anyways, end of rant. All right, let's move on.
It's just we have to like fill the PvP
Yeah.
narrative with something, right? It just like people got tired of just meme coins, so now they're like meme coins with narratives and utility.
Yeah. Well, yeah, this was it's categorically different. It's not a meme coin. It's something else. But
yeah, it's an interesting experiment. But I guess I would just like to see some like utility before just like the interesting tokenomics is all I'm saying. Oh, and you had another really interesting story. This Telegram bots taking off. How does this work?
So kind of the same, maybe along the same lines of what I was saying of the PvP environment is that people are starting to use Telegram bots to snipe early listings of tokens, to copy trade other people. And there's I think maybe even get in early on NFT mints, and those are happening all kind of within Telegram, and users typically they need to either create a new wallet and seed it with Ethereum or whatever base token, I think generally Ethereum, or they need to hand over their primary private key. So it's a little dangerous, but these are getting a lot of users, and we're up to like I think 93,000 users right now. I think it was about like 88,000 when I wrote the story. And that is where we're at. I mean, someone was saying, I talked to one guy who was at Banana Gun, who I think they work on like being able to snipe tokens super early when they launch. And he was saying that basically before it was like just people who really know how to write these bots themselves, and they were custom. And now, this project Banana Gun is kind of quote unquote democratizing access to sniping coins super early. So, I don't know. YYC might have played around with them more, or maybe Jeremy or Cami, but yeah, it's kind of an interesting. It's like definitely like the degen traders trying to make that quick money side of the market. But that's where we're at right now. It's a bear market. So
once you use one of these things, you will never go back to the Uniswap website.
I haven't used one. Really? Okay.
I haven't used one either, but I might want to spin up a wallet, which, by the way, full disclosure and disclaimer, haven't ever used one of these things. But if you will, never give over your private keys. Never give over your private keys. Never give over your private keys from your main wallet to anyone, to anything, to any bot, to any person, to your friends, to your family, to your dog. Don't do it, okay? Spin up a new wallet. It's very easy to do, and you can fund that wallet safely from your main wallet without any type of security breach. Operational security is important, and people build all sorts of great new fun tools to use. Be safe when you use them.
Nice.
Agreed.
Absolutely. So how do these bots work? Why we see
It's pretty simple. So within Telegram, you just open up a DM with the bot and hit like the start command, and it gives you like this menu of like all you need to do is basically once you set it up with your initial settings, initial settings being what's your default purchase amount, how much are you willing to pay slippage wise, how much in gas, etc. Like once you have that figured out, when a new contract or any new token drops, all you need to do is paste the contract address, hit send, and it does everything for you. And very few transactions fail because these things are really quick. And using the UI all you see is that swap failed. I'm so tired of seeing that on the Uniswap page. But once I started using one of these things, it's amazing.
I think that has to do with fees and slippage with me on swap fails. Like it has to do with the contract has fees that are set up that I need to set a slippage around. And usually when I do that, no problem. But I'm curious, what is the threshold of slippage that you would say, having used it, is recommended?
It depends. I mean, most of these tokens have like taxes on transfer anyway, like between 5-6%. So your slippage has to be above that.
Okay.
Right. In any case. And if you're trying to go early, you have to set something like 30-35%.
Do these spots have any type of like exposure to MEV?
I think they have some protection inbuilt. The devs are pretty, forward thinking when it comes to these things. And it's not just Telegram now. There are bots that you can use in Discord. There are bots not just for trading, for posting social media posts, for gambling, sports betting, all kinds of this is just, and CoinGecko even has a sector dedicated to these bots now. So I think it's just people kind of leveling up their trading game, I guess, because if you have these tools available, and most of them are free to at least get started with, you have to pay for premium features, but free to get started with, and they charge like a fee out of the transaction. I think it's 1-2%. It's worth doing if you're trading these meme coins.
And the use case is getting in early, right? It's just like being the first to buy a coin when it launches.
Yeah, if not first, early at least.
Right.
Because if you've seen any of these meme coin launches, like that first candle will take it from, I don't know, 50K market cap to say 300K. So, and while you're trying to buy and everyone else is trying to buy, and if you're using the Uniswap front end, you're going to get fails time and again until the price kind of settles down, by which time it's too late. So this definitely helps. It's not like a magic bullet. You still can fail if there's too many people, rushing for the same coin. It's like super hyped or whatever. But it definitely makes it easier to use. And a lot of them have these analytics tools built in as well. So you can like put in any contract address and it'll tell you, it's got like these heat maps which show you, okay, of the top 50 or like the first 50 holders, how many are still holding, how many have sold, how many have partially sold. So you know how many people are waiting to dump on you, if you're entering at a given price. So I tend to wait until like most of the early buyers have been cleared out. So the first, second, or third sell-off, that's when I'll try and enter, if I've missed the initial snipe.
I see.
And it's like you interact directly with Telegram? Like you give Telegram commands, I guess?
Exactly. You don't even touch MetaMask or anything. So these things create a wallet for you. So obviously, like Jeremy said, just fund it with a tiny bit of ETH, that you're willing to play with.
Yep.
And if you make profits, just keep withdrawing as you go along. Never leave like substantial amounts of ETH in these bots, because to be honest, I have no idea how they work behind the scenes. I just know that it works in Telegram. So I'm sure most of the users are the same, because all of us are basically the people who saw, hyped NFT mints get sold out, or like tokens get sniped in front of our eyes, and we couldn't do anything about it back then, but we can.
I guess like they would be interacting directly with the smart contract. Like they're not going, I don't know, like how, I don't have no idea how it works either.
It's just a bot using a command to send a transaction.
But like, where are they? Like, are they using a DEX aggregator? Like, how are they buying?
Well, you give them the contract that you want to buy from. So you are the one who's responsible for sourcing the tokens that you want to invest in.
So most of these are directly on Uniswap, because all these tokens, like these tax tokens, aren't compatible with a lot of DEXs, except Uniswap V2. So most of the trades go directly to Uniswap. So I'm assuming, so you send a command on Telegram, their API or whatever picks up the command, and the bot triggers a transaction directly to the smart contract, I guess.
Yep. Or it uses a router to find the best price if they wanted to really get complicated.
No,
way.
but it's a good question, Cammy. I think someone told me. It's like I didn't have a chance to interview the guy, but yeah, he said something. But they write like custom RPCs. This is coming a little out of my depth, but like they achieve speed through some. They're not just like, yeah, because it doesn't make sense that they would just use Uniswap. Like why is it
Yeah,
better? So they're doing something. I feel like I sound so kind of primitive, but they're doing something behind the scenes to interact with the blockchain in a more sophisticated way than just obviously
just
using the
going to,
interface.
yeah.
Oh yeah, absolutely. Because there are competing bots too, right? It's not just. I mean, there's like big war in the Telegram bots too. There's
Yes.
like Unibot, this banana gun,
Yeah.
new entrants coming in every day, pretty much trying to like offer one more feature or be like faster at something. Or that's because that's how competitive the sniping game is, right? And like microseconds, milliseconds could mean the difference between a 2x and a 10x.
True.
Right.
So interesting. Reminds me of like Flash Boys in TradFi.
Yeah.
Pretty much.
Right?
I mean, this is the blockchain version, I'd say.
So interesting. You know how they were like the first high frequency traders were building, like putting their servers closer to the NASDAQ to be able to trade faster.
Yep.
Like these Telegram bots are the blockchain version of that. So interesting.
Yeah.
Oh yeah. So these guys all run their own nodes and like very low latency, etc. Because
Right.
there's no point having all the infra in place if you can't send the transaction quickly, right? So yeah, it's crazy. Like I said, to me, it's just like a black box that I know it just works. I trust it with a little bit of ETH so that I can use it. But beyond that, that's the extent of my knowledge.
It's interesting to me, like this exponential curve of growth of these bots, because the use case is pretty sophisticated. Like you need to be like a committed trader to be using a bot. So the spike in these bots just tells me, even in the bear, there's a committed group of degens using DeFi, which is pretty bullish. Like there's activity. There's people trading and using sophisticated tools to trade.
Yeah,
anywhere
absolutely.
you can get an edge on other traders, there will be DeFi degens.
But especially with those Pepes, right? Like I was talking with someone for this. They're like, you don't have to get a Pepe. You can just get. I mean, YYC, you probably know. You throw 10 ETH or an ETH into something and you hit. You can just be hella early. I don't know.
Yeah.
It doesn't even have to succeed at all.
Absolutely. I mean, most coins, if you see, like I drop shit coins in our channel every day, right? Like, so you see, like most of them, like they'll rally 4, 5, 10, 15, 20x and then go to zero. So you just need to like ride that wave, and it doesn't need to be a Pepe. If you get in early enough, like let's say like sub 100k MCAP, your risk is quite low, because even if like that team has the slightest shred of marketing prowess, they can pump it to 500k. So that gives you 5x. And you hit enough of these, that's real money.
Amen.
And then you hope for the next Pepe. So you leave like moon bags of all these absolute junk coins. And then one fine weekend, you look back in your wallet and say, what the hell was I thinking?
Oh my God. Sounds like a dream. Great life.
Oh God. It literally is a casino though. It's like, okay, gambling for the meme coin that'll pump, but it is what it is.
It's a corner.
It's a game.
It's a corner of the market. Yeah, it's part of it.
Yeah, that's the way to look at it. Yeah.
So there are bots that also help like your casual traders react to news. So that's another interesting sector that I've been watching. So there's these. So they basically pull news feeds from like Tree of Alpha or Wu Blockchain, etc. Yes, of course. Like we're aggregated in a lot of them, by the way. But so you can trade through Telegram using your Binance or Bybit account. So the news drops and it'll say go long 10x, short 10x. So it's just like basically hitting buttons based on the news. So for example, when the Grayscale news dropped, a bunch of people were able to like just mash the button early enough and grab onto that God candle that we had.
Crazy.
Interesting. I wonder if these bots are having an effect on crypto finally reacting to news, because for the longest time, I don't know what you guys see, but in most cases, some huge news drops and crypto doesn't do anything. And
I think it's all subjective. I mean, like huge news might be different from one person to another. So like it's all subjective.
Yeah, I guess, but like from like years of covering this thing, it's like, and versus covering traditional markets at Bloomberg, where it's like something drops and the thing moves, and it's just like so instant.
I mean, when something comes out in traditional finance, like you said, like before you read that news and you go and look at the stock, it's already moved.
The stock already priced it, like
So
it already reacted.
In
and
traditional
it's so different
markets,
in crypto.
though, we have like a ton of players that are plugged into these feeds that have already like revenue streams that are built into this like marketplace, right?
Exactly.
Whereas in
So
crypto,
that's
there
what I'm
aren't.
saying. It's like,
so
I wonder if these bots that are made to react to news will start to change that.
perhaps, yes.
Yeah.
I mean, they certainly will as more people use them. I think it's inevitable.
Yeah.
You get a good point.
Interesting. Anyways, okay, let's move to the next headline. Jeremy.
It's me. Am I up?
Yes.
All right.
You're
up.
Elon Musk.
X, formerly Twitter, has obtained a Rhode Island money license, it's a Rhode Island currency transmitter license. Now, this is different from a money license. It allows the company to manage, transfer, and exchange digital assets on the platform, as well as hold those assets for other users. Now, X has approximately 450 million users. Now it's positioned to potentially introduce cryptocurrency payment services with the auspices of regulatory approval across its platform. The move follows on a series of actions by the platform since its acquisition by billionaire Elon Musk. In October the previous year, X has a history of integrating cryptocurrencies, though. We've seen Bitcoin tips integrated on this platform before in years past. And in terms of NFT engagement, you can pay a subscription service and get that little hexagon around your profile pic to indicate your ownership of that image. So, if it does happen, by 2027, I think I read somewhere Twitter is expected to grow to 650 million active users. This is a huge opportunity for cryptocurrency to be fed to people in a very known navigable interface, which is something that has been a pain point for the industry for years. If Elon is able to use the custody aspect of the platform, he could potentially set up a series of custodied wallet services set up underneath Twitter, and then using the company's traditional financial backing, he could introduce a layer of functionality to that wallet service via the Twitter interface. But that all remains to be seen. It's speculatory. Still, it's pretty interesting. Elon's, in the past with his other companies, he's, bought Bitcoin and shown that he has an interest in digital currencies and utilizing them. So if he's definitely interested in, seeing that happen across Twitter, I wouldn't be surprised. Also, you have to take into account there are certain political leanings wherein there are affiliations that Elon has shown a proclivity towards in the past that also have shown an interest in digital currencies in terms of their sovereign capacity to be transmitted without government interruptions. And therefore, that may in turn draw cryptocurrencies to Twitter if there's a large right-wing push on the platform.
Also, like, remember that Elon comes from PayPal. Like, he has a like payments background,
Yes.
like that, that it would fit really well to try to rebuild a new PayPal on top of Twitter or X, whatever, with crypto, and make it this like super app that does everything. So
indeed,
yeah,
it's not so far-fetched.
Yeah, I gotta go downtown and talk to I haven't seen the sign. I know they took down the pretty little bird. It sucks, but
it does suck.
But now there's like a rave going on over there with the
now it's a 24-hour rave downtown.
Yeah.
True.
All right. Anyways. Okay. what's yeah, we talked about these bots. Another kind of layer of DeFi sophistication here with Uniswap v3
I mean,
managers.
in 2021, when Uniswap v3 was introduced, it introduced a layer of complexity to the DeFi liquidity market. It allowed you to try to manage capital efficiency in a more, efficient way, so to speak, right? But the problem is that it introduced layers of complexity to it that make it difficult for unsophisticated members of the ecosystem or those who don't have large amounts of capital allocated to make the most of that protocol. Because of that, a lot of the main coins that we see actually utilize Uniswap v2. But for those who want to make the most of their capital efficiency and keep that capital pegged on the right side, so to speak, we have seen a number of capital management services come up in the place. Now, one of those is Maverick Protocol, and I spoke to Maverick Protocol's. I spoke to the individuals at Maverick Protocol. They've launched on Base, which is Coinbase's layer 2 network, and basically they've seen a lot of individuals take advantage of their trading patterns. They have some interesting automated trading patterns that make it easy for you to allocate capital. You can set it like mode left, where basically we don't think that the price is going to go up, mode static, where price is going to basically be trading sideways, or mode right, where we think the price is going to go up, and you can allocate your capital into these pools, and then it automatically manages it on Uniswap v3 to give you the best capital efficiency without exposing you to the potential like permanent losses that happen when you rebalance on the wrong side of the pool, et cetera, et cetera. Now, Maverick isn't the only company that's offering these types of services. As a matter of fact, there are a great deal of these companies out there, and Maverick is just kind of eking its name out. However, Chief Technology Officer Bob Baxley told me that he anticipates a large number of individuals onboarding into the DeFi ecosystem via Base, and therefore the protocol's launch on Base is, pursuant to the idea that this is going to be a vector for that to take place. They do have a note that, like, on Maverick, their Coinbase ETH base pool is achieving more than 100% capital efficiency, according to Baxley. So that's definitely something to be said for individuals that are looking to manage their capital in a capital efficient marketplace without suffering the pitfalls of lacking the sophistication or perhaps the weighted capital in order to avoid the costs of rebalancing.
And some of the other projects you mentioned in the story, Gamma, and I guess like the biggest one is called Arrakis.
Yes, okay. Arrakis. And for those of you familiar with the Dune series, those who control the spice control the universe. And Arrakis is, of course, the planet from which the spice originates. And therefore, Arrakis is the most dominant protocol of all the other ones. Even though its chart is down, Arrakis still has a great deal of capital in it, and I do not see that going down anytime soon.
I could not finish Dune.
Watch the movie.
I should watch the movie. Is it good? I could not get through the book.
I think your fear of it not being good is the mind killer, and when you let your fear pass through you, only you will remain.
Okay.
The second, I guess the sequel was supposed to come out, I believe, in November, but it's been pushed to next year.
Oh, okay.
I was looking forward to that one.
The first
my holidays now around like major movies I want to see, because I can only do it when I'm back home and I can leave the kids with the grandparents.
I still haven't seen Barbie. I've been wanting to see that forever.
I don't know if we can compare Dune to Barbie. Hold on.
I think so.
No. Let's put a pin in that one.
All right. Okay. Final story to discuss, Jeremy. You had this feature on real world assets. What's going on here?
So real world asset adoption is not slowing down. It's almost like we've reached this cycle where now the crypto assets are looking towards something to keep them legitimate. So where else but real world assets? A number of protocols across the sector have kind of looked towards adopting them and integrating them. Many of these adoption strategies involve utilizing some sort of holding company that has been set up to manage these types of assets because there is a certain amount of regulatory stuff that goes along with that. So the process to do this is pretty cut and dry. we can focus on some of the major ones that I was able to speak to. I talked to CEO Brent Xu over at Yume, who's focusing mainly on bonds, given Xu's background in bond trading, the better part of a decade that he spent doing that, optimizing their approach to build bonds and get a competitive edge in the real world asset market for their platform participants. Also, Maple Finance is also expanding its real world asset lending tools. They already actually offer an accrue lending tool, which targets businesses in the U.S. to facilitate cash advances on existing backlog of forthcoming tax rebates, such as an employee retention program. And they want to expand it. I talked to CEO Sidney Powell. He noted that the blockchain technology offers significant advantages for cross-border remittance and trade finance export deals. So they're looking to try to, in the next 6 to 9 months, I believe, capitalize on a trade finance product. Looking across the pond here, so to speak, not really a pond, but across to Pendle, we're looking at a yield splitting protocol where you can take your yield, take it off of the asset and try and manage those separately from one another. They're enhancing rate swaps to include stable coins that incorporate revenue from real world assets. So users can take these treasury yields, these yields to secure fixed yields on assets through Pendle's interest rate derivative protocol. And with a focus on the rapidly growing real world asset sector, Pendle is positioning itself to cater to the potential in that marketplace. Meanwhile, Frax, which we spoke of not long ago, has passed almost unanimously. It's basically approval to partner with this Delaware-based nonprofit C Corporation FinRes PBC. It was set up to manage real-world assets for the Frax protocol and then operate at cost, sending them back into the protocol for the users and to take a small amount of fees so it can manage its operational costs. The collaboration is going to give Frax the ability to hold and manage various traditional financial assets, including cash deposits, treasury bills, and it's just, again, another move by another company into the real-world asset sector. Now, in terms of those types of assets, the traditional finance world, yes, we've seen a lot of adoption, but something very interesting is actually something we've also seen in terms of luxury good assets. Platforms like Arcade.xyz and 4K are working together to create non-fungible tokens that are representative of validated luxury goods that then can be applied in the DeFi marketplace. Now, Arcade has turned around and said, we're going to facilitate lending for these types of services. And we've seen a plethora of types of deals showing up with luxury goods, such as like high-end watches. And what we're looking at soon, perhaps more types of activity like that in the near future.
Awesome. Very interesting stuff. I mean, this has been an ongoing theme. Real world assets picking up steam in DeFi, and we're seeing more and more protocols integrate this. Seems like all stablecoin issuers, all lenders will end up doing this. And I know you have to jump to your interview, so
all right,
feel free to say bye.
Bye, everyone. Have a good week.
Take care, Ron.
See you guys.